Hello, good to have you on the program again today. And of course, it still remains the economy today and on the station that is known as Kaftan Television. We have an idea of certain things that are happening right now that is important that we'll bring up on this program, and that's why it will be what will form the topic of the day. And Okechukwu Onubogu here, and I'll be with a guest that you will get to see as we will discuss this particular topic I'm talking about. Incidentally, the topic happens to be bank recapitalization in inflation. So we'll look at that and see what will come out of it. That's one thing, because all we have to do here in the economy is to bring out the way it is happening and discuss the way forward as far as the topic is concerned. Welcome again, and we'll begin with, because we have segments, we have different segments. We have the discussion segment. We also have from the business news, we have others that will still come up as we go on the program. We still will not forget to let you have our news bits as they come, but right away we'll begin with one, and that is the one that is from the business news. Stay.
In a major step towards strengthening regional trade ties and economic integration, the Federal Republic of Nigeria and the Republic of Benin have agreed on a joint trade framework to eliminate trade bottlenecks. The agreement was reached at high-level meeting held at the Minister del Commerce for Finance, Cotonou, Benin Republic on Saturday, 2nd August 2025. The session brought together senior government officials, custom chiefs, and trade experts from both countries to chart a collaborative path towards efficient cross-border trade. Minister of Industry, Trade and Investment, Mrs. Jumoke Oduole, described the bilateral framework as a bold step forward in West Africa regional economic strategy. She recalled President Bola Tinubu and parties Talon's recent signing of a preliminary memorandum of understanding at the West African Economic Summit, stressing that both leaders had charged their technical teams with translating political commitment into actionable policies. Ms. Oduole emphasized Nigeria's ambition to evolve from being a regional trade player to a global voice in shaping fair and inclusive international trade systems. Also speaking, the Controller General of Customs, Adewale Adeniji, reaffirmed the service's readiness to execute the trade agreement's outcomes and ensure its alignment with Nigeria's national trade priorities. He revealed that a formal memorandum of understanding building on this framework is expected to be signed by the first quarter of 2026. Nigeria's Business Performance Index maintained positive momentum for the 6th consecutive month in 2025, reflecting sustained economic resilience and cautious optimism among businesses. This is according to the June 2025 edition of the NESG Stanbic IBTC Business Confidence Monitor (BCM) report released in July. The report said that the current Business Performance Index for June rose to 113.6 points, an improvement from 109.8 points in May. This shows continued expansion with the index consistency staying above the 100-point threshold that separates growth from contraction. The business confidence measure, which captures business sentiment regarding future performance, surged to 134.5 points in June, its highest level so far in 2025. Despite these positive indicators, limited access to finance was reported as the most stressing constraint for businesses in June. Other challenges in descending order include inadequate power supply, foreign exchange volatility, nuclear economic policies, and high commercial lease and property rental costs. The World Bank may approve $250 million loan to Nigeria next month under the third phase of its health security program in Western and Central Africa as the country battles mounting health and economic challenges. According to an appraisal, a document published by the global lender, the proposed loan, which is scheduled for board approval on September 23, 2025, will be channeled towards improving Nigeria's ability to prevent, detect, and respond to health emergencies through strengthened systems and regional collaboration. The World Bank document noted that the objective of the loan project is to increase regional collaboration and health system capacities to prevent, detect, and respond to health emergencies in the Federal Republic of Nigeria. The funding, which will come in the form of an International Development Association credit, is expected to be managed by the Nigeria Center for Disease Control, with the Federal Minister of Finance serving as borrower.
Good to have you back here, and we'll be talking to ensure that everything moves fine. Looking at what we've seen in the business news, we'll still go ahead. It's good news, it's beautiful news that Nigeria is beginning to agree with another country, to liaise with another country, to ensure that business grows around us. That's talking about those ones we've seen in Benin Republic. So it's good news, it's good, beautiful news. Let's see how best this would not only help the economy, it will also help security. So looking at security, looking at the economy, and all put together, I think this way it will work out well for us as a nation and as a region, because they are next to us. Well, that's it. We are still here, and we've also got to look at some other things that we have, and I want to look at a review of the money market reviews and all that. And so first of all, we look at the one that we have as in the stock exchange, in the stock market. We'll look at the top gainers, then we'll look at the top decliners, just these two. Then after that, we'll return and look at the general news of the money market. That's what we want to do right away. So let's begin with the top gainers before we get to top decliners. Then we'll return to the money market business. So we talk about them. Yes, the top gainers, you have the USC Nigeria having 8.00 points and 9.96%, while Boa Cement has 13 points with on the positive. Of course, they are all gainers, so they are all on the positive. No need mentioning that. They have 9.63%. It's all bullish. And then Veritas Cap has 9.45% improvement, and the Better Glass also has 9 points, but this time 9.22%. So they have made gains with 34.50 points for Better Glass and 0.12 points for Veritas Cap, then Boa Cement for 13 points, and UAC Nigeria for 8. And that is what we have for the top gainers for yesterday's business, of course. Now let's look at the top decliners or top losers, as the case may be. Whatever you call them, out of these two, it's still their name. And so we have our top decliners. Champion declining by 10% too. Orlando declining by another 10%, and then Dangote Sugar declining by 10% as well, and Cornerstone declining by 9.78%. That's what we have with these groups, talking about the stock exchange right away. But we'll not talk about the weekly story about the stock exchange, and we just want to see stock market news and all that has to do with that. There's a picture for that while we read what we have. The money market news. Yes, the monetary review that we want to talk about, we're beginning with the Nigerian money market, maintaining a relative stability all through last week, despite the absence of fresh liquidity injections from the Central Bank of Nigeria, the CBN. Systems liquidity remained comfortable, with the week opening at a healthy net surplus of approximately 2.0 trillion naira, averting significant scramble for funds among financial institutions. Short-term interbank rates reflected the generally tight financial environment. The overnight Nigerian interbank offered rate, that is the NIBOR, held firm at 26.88%. However, longer dated tenors saw upward repricing. The 1 month, 3 month, and 6 month NIBOR rates rose to 27.62%, 28.37%, and 29.14% respectively, marking weekly increases of 138 basis points, 148 basis points, and 196 basis points respectively. These adjustments underscore elevated funding pressures within the banking system, even in the absence of acute liquidity strain. Similarly, open buyback, that is OBB rates, remained unchanged at 26.50%, while the overnight Ostuk-N lending rate dipped marginally by 2 basis points to close at 26.90% from 26.92% recorded the previous week. According to analysts from Cowrie Asset Management Limited, the CBN conducted a significant open market operation, OMO auction, during the week, offering a total of 600 billion naira split evenly between 113-day and 204-day maturities, that is 300 billion each. Despite the dual offering market demand, market demand concentrated solely on the longer tenor. The 204-day paper attracted total subscriptions of 1.63 trillion naira, with 1.55 trillion naira allotted, resulting in a bid to cover ratio of 1.05 times. The stop rate cleared at 23.87%, while the 113-day tenor received no bids or allotment, reflecting, of course, clear investor preference for duration at prevailing yield levels. And in the foreign exchange market, excuse me, as I just mentioned some of it, the Naira experienced divergent movements, buoyed by modest supply ease at the official Nigeria Exchange Market NFM window, while facing pressure in the parallel market. At the official window, the Naira appreciated slightly by 0.06% week on week to close at 1,533 Naira 74 kobo per dollar, supported by improved FX liquidity and continued Central Bank of Nigeria intervention. In contrast, the parallel market witnessed marked depreciation of the Naira, weakening by 0.13% week on week to an average of 1,537 Naira per dollar, as rising demand from holiday-bound travelers exerted upward pressure on the dollar. Nigeria's external reserves climbed by 1.53% week on week, closing at $39.36 billion as of 30th July. The increase in reserves further underpinned the relative strength of the Naira at the official window. Currently, Nigeria's Bonny Light crude oil rose by 3.13% week on week to $74.76 per barrel, supported by lingering global supply concerns. That is $74.76. Nigeria's external reserves climbed by 1.53% week on week, closing at $39.36 billion. That is $39 billion. As of 30th July. The increase in reserves further underpinned the relative strength of the naira at the official window. Currently, Nigeria's burning light crude oil rose by 3.13% week on week to 74.76 barrel per day, $74.76 dollar per barrel, supported by lingering global supply concerns. In the international commodities market, oil prices came under pressure towards the end of the week. Brent crude declined by 2.80% to $69.70 dollar per barrel, while West Texas Intermediate WTI crude fell by 2.71% to $67.40 per barrel on Friday. The declines were driven by renewed concerns about the outlook for global energy demand, particularly from the United States, amid fragile economic data and ongoing tensions. Last week, in the bond market, the Nigeria secondary FGN bond market witnessed renewed bearish sentiment as a wave of sell-offs across the yield curve drove the average yield higher by 15 basis points to 16.35%. The pressure reflected cautious investor positioning amid changing expectations for local interest rate dynamics and limited primary market support. At the July Federal Government of Nigeria FGN bond auction conducted by the Debt Management Office DMO, a total of 80 billion naira was offered to investors, split equally between the 14.55% April 2029 and 14.70% June 2023 maturities. The offer size marked a notable reduction from the 100 billion naira and 300 billion naira offered at the June and May auctions respectively, highlighting a deliberate effort by the DMO to rein in supply and temper yield escalation. And that is just what it is with that. While we know that we've also talked about the stock exchanges as a whole on its own. And as we go on, we will also have to mention some other things that will come with us. That is talking about the fact that we still have our news beats that will still come your way, and that the guest of mine whom I'll be talking with will be joining me any moment from now. That is talking about Godson Eke. He is a finance expert, a former bank manager who understands the story quite all right, and that's why he's coming in on the program today. And we'll be looking at bank recapitalization in inflation. That is when we have inflationary trends and we're hearing about bank recapitalization. I want to find out what it is like talking about it at a time like this and in a situation as this. We'll find out when he's around, and then we'll get on with that immediately. Well, before introducing him, let me also talk about the fact that there are some rates across, the CBN rates across, that we need to look at. That is monetary rates. That's what the naira is to the dollar, the cent, the riyal, and all these put together. We have a picture of that, so we can look at that while we talk about it. We have the US dollar coming at 1,530, and for buying 1,500 rather, no 1,530 for buying, and also for those who wants to sell, 1,510. No, it's still 1,530, but the central bank rate is 1,510. That is the rate. And we also have the pound sterling. The pound sterling goes for 2050, that is 2,050 when you want to buy, and 2,100 when you're selling the pound sterling. The euro is at 1,710 naira for those who want to buy, and 1,754 naira for those who want to sell. That is the euro. Well, the yuan is 108 naira for those who want to buy, and 108 naira as well, but 1 kobo for selling and 3 kobo, 1 kobo for buying and 3 kobo for selling. The real is at 118 naira 5 kobo for those who want to buy, and 118 naira 8 kobo for those who want to sell. We also have the CFA, the CFA. It's 70 naira, and 0 naira 70 kobo really, and the same way 72 for those who are selling. And looking at all that, we know that from the commodities market to the Bureau de Change market, there is a little almost same as what you have in the CBN exchange rate, because for those buying the dollar, it's 1,030, while those who are selling it will do 1,040, and for the euro, those buying will do 1,045, while those who will sell will do 1,060. The pound sterling is 1,240, and those selling is 1,310. That is at the parallel market, the Bureau de Change exchange rate. That's what we just looked at. And looking at the commodity market, we have the crude oil that we've just mentioned, the Brent, then the gold. We have gold, we have silver, and we have a natural gas. For the gold, it's $1.799 per ounce, and silver $19.39 per ounce. Natural gas is $463 per metric BTU, the MMBTU. That is, well, we'll just go on to look at the rest of the things that we have. And while this happens, we also know that we have the idea of mentioning and bringing in the person that is our guest on the program today. While we talk about that, we'll just take this slight break and return to continue with what we have. Well, good to know that you're still there, and thank you for being there for us always. I have a guest, as I earlier mentioned him. I said that he is Godson Eke. Sir Godson Eke is someone that is a finance expert. He is a consultant as well. He is a finance consultant, development consultant, and so we want to have him on the program right away. And let me say welcome to you, sir, Sir Godson Eke. Good to have you on the program.
Thank you, Mr. Onubogu. Thank you for
Thank you.
having me. Thank you.
All right. Looking at what we have as our topic for today, it is bank recapitalization, and bank recapitalization in inflation. Tell us about bank recapitalization first of all, then let's see how it will also work, having it in an inflationary situation.
Bank capitalization, I think in Nigeria and the banks in Nigeria are not new to it. Whenever the government have problem with some of the fiscal policies and the central bank run into trouble others with their monetary policies, the next tool they will use is to descend heavily on the banks. Some 18, 19 years ago, 2005, 2006 to be precise, we've gone through this hog before, and the argument has always been the same. The argument has been the same. We want to enhance the bank's capacity to operate in the economy. We want to make them have stability to withstand the economic and inflationary shocks, and so on and so on is what they normally use as a reason. What is this recapitalization all about? Just to increase. The idea is to make the banks increase their capital base, increase their minimum capital requirements that is set for banks to operate in Nigeria. And the current one now we are on it, which started in 2024, that has a terminal date of 31st March 2026 or thereabout, is that for you to operate as a commercial bank with an international authorization, international, with international intent, you must have a minimum of 500 billion naira to operate. Then for commercial banks that would want to have a national authorization, they must maintain a minimum of 200 billion naira. Then commercial banks with regional authorization must have cough out 50 billion naira. Then non-interest banks will need to have a minimum capital of about 20 billion naira, and so on. And for non-interest ones that want to operate at the regional level, their own should be 10 billion. The one with the national outlook will need to have a minimum of 20 billion naira. Now, and they have been given between that April 2024 to 31st of March 2026, which is 24 months. They have been given this 24-month period to meet up the new capital requirements. And the whole argument is that the need is to strengthen the bank's assets base, support economic growth, and achieve federal government goal of a 1 trillion economy by 2030. And to meet these capital requirements, how are banks expected to do it? The natural thing, or the most traditional thing they will normally want to do, is to do rights issue. That's issue more shares to existing shareholders. Do private placement, approach individuals and corporate private investors and sell their shares, or go into mergers and acquisition or takeovers, as we experienced in 2006 and so on, when we crashed the banking. The number of banks in the country crashed from 125 or thereabout to about 25 banks at a time, and that's exactly what. Now, all this is being done because the government feels that they want to enhance stability. They want to enhance stability. They want to increase the capacity of the banks. When you say you want to enhance stability, what you're saying is that you want to strengthen the bank's capacity to withstand financial shocks. Now, the question some of us will ask is, these financial shocks, how were they created initially? Some of them are created by certain largely government policies. Sometimes the policy somersaults we have had in this country create a lot of economic shocks, create a lot of economic dislocations here and there. And then banks also somehow in this country have devised a means, what I would call survivalist instinct. They will always survive whatever the climate, the economic climate to throw at them. They find a way to go around it and survive. And then the policy operators keep looking at the banks as the people that are benefiting from all this thing. That's why they would always want to come to descend on the banks and increase your capital, increase and this. Fine, good and fine. The policies, the positive policies are well intentioned. Nobody will take it away from there. What we're saying is that if you keep descending on the banks to do capitalization, and you the policy implementers, the fiscal policies are not doing the right and proper thing, we will continue to have these economic dislocations every now and then. The economic shocks, the financial shocks will continue to reverberate. Now, that's where we are now, and that is the expectation that probably, let's see how it goes. People are already beginning to look at it that the way it went in 2005, 2006, during Soludo, as central bank governor era and all that, may not be the same way now. Because since you now have tiers, those who want to operate at the regional level may want to remain there. And you have tiers, those who want to do national, those who want to do international. Probably if I am playing nationally, that's the expectation now. And I think I cannot remain by virtue of what has been done. People may want to go and obtain a lower license and play regionally. Okay. And that's what we expect, because there's some of the mergers and acquisitions that took place in the last time, about 18, 19 years ago. Some of them, the shocks of that merger alone, the impact it has had both on the economy and on the operators is still very, very, very apparent up till now. And it's already, people are beginning to suspect that some banks will just want to, change their license. If I don't want to play internationally, let me remain national and drop down. But knowing the way the banks have always behaved in this country, it's possible that they may equally just go ahead, because already how many banks do we have? Barely about that same 25 or 20 something thereabout. You want to shrink it further to lower number, everybody will fight to want to remain and keep his name rather than give up his name and license and merge with another person. Like I said earlier on, some of the mergers before, some people came out of it bruised.
Yes, and even in that, you see that those ones that came out of it bruised, those ones who were submerged into the bigger ones lost their workers. And so is it what will be about to happen again if it's allowed to happen?
Yeah, that's why we are thinking that the operators themselves they know better now than
yes, they could go down.
Some of they know better now. Some people may want to scale down, or just give out in terms of merger or whatever. We don't foresee really, except in this country anything is possible. A lot of personal interests come to play in these things.
Okay, now looking at the economy, the inflationary trends that we know are there, is this the right time to do this recapitalization?
Yeah, recapitalization and inflationary environment, it can have both positive and negative effects. Of course, there are pros and cons of it.
Okay, tell us more.
In looking at the positive side of it, now, with more money, capitalization will give more money put more money in the hands of these banks, like it did in the past. But that again is arguable. It will give them the capacity to increase lending. That's the positive side of it. The idea is recapitalize, get more money, have more money in your hand. It will increase your capacity to lend. But the question is, the last one we did, what has been the lending, the increase in the lending to the real sector, to the economic units that really need funds, to the savings deficit unit? Because the idea of credit creation is mobilize or mop up money from the surplus units of the economic sector and deploy it to the deficit units that need these deposits for economic activity. But what we see is that these banks will use this money, most of them will just stay where they have their comfort zone, trade in foreign exchange, make their margins. How many borrowers, how many investors, how many companies, the productive sector, let me just say the productive sector of the economy, how much have the past SSRs impacted on them? So one of the positive effects is that it will increase their lending capacity, Whether they will lend or not is another thing. It will improve stability. The improvement in that stability is that with more money raised as a result of capitalization, these banks are going to become stronger banks that will be better equipped to withstand economic shocks, including the present inflation that we're talking about. Now, that's another thing. The third positive side of it is that it will enhance credibility. The capitalization can boost investor confidence in the bank, especially in the banking sector. And I will say that the last exercise, actually, in the past 18 years, has somehow boosted the credibility of the successful banks, those who succeeded in. Even though at the initial time there was a whole lot of issues, some people during that period were like, what is happening? The bank I used to bank, because information is key. Financial awareness is important in this country. Not many of the populace are financially aware of some of these things we are talking. When an uninformed customer of a bank goes to his bank and discovers that bank has removed his name, it used to be XYZ Bank, and now he goes there and now say the XYZ. In person, at that time, at some point, some of them were thinking the banks have folded and gone away with their money. They didn't quite understand what the capitalization meant, that they may just have changed them, either merged with another bank, another financial institution, or have been acquired and that they haven't really lost their money. So it took time. But now, people are really adjusting to it. So basically, I said the positive side is this increased lending capacity, improved stability, and enhanced credibility. Again, the negative side of it is that bank capitalization comes with increased cost. It comes with increased cost. The same way, because banks will need to raise money through costly means. It's not easy to go to capital market to say you want to issue 20 billion shares, or how many, whatever billion naira worth of shares and other. It comes with increased cost. The cost of doing that is high. It also reduces lending. Incidentally, in the same way, it gives them capacity. It gives them capacity to increase lending. It's also because higher capital requirements can lead to reduced lending, as banks may become more cautious in an inflationary. We are talking of an inflationary environment. During inflationary environment, banks are very cautious. How many banks in this era, in the last, let's say the last 2-3 years, in the last 2 years or so, upward of 2 years till now, how many of them are really lending? When they consider the inflation, when they consider what is going on in the economy, they are more disposed to just provide services that will give them quick return than to go into lending. It has a way of reducing lending because inflation is already high in this country. Now, notwithstanding what MBS has said, National Bureau of Statistics has said, at the end of June, the economy has grown by 3.13%, blah, blah, blah. And then inflation started categorizing different types of inflation. Some of them have dropped by 0.something%, some this and that. Agreed, all those things are happening. What is the reality on ground out there? Another negative side effect of capitalization in an inflationary environment is inflationary pressures itself. Increased lending can exacerbate inflationary pressures if not managed carefully. Already we are talking about inflation will mean a lot of liquidity, chasing fewer goods. Simply put, there are more money out there than goods and services can procure, So inflation and all this and that. Now, if you raise capital really, and these things occur, it can also put pressure, increase inflationary pressure on the economy. So those are the things. Now, what is required? What do we really need to do? There's a need to really balance this stability and growth thing. Regulators must. What we need to say is that while they do this on the banks, let them do their own deal. Fiscal policy operators should be on top of their game. Monetary policy operators, so which is where the regulators, the CBN and all the rest of them that manages the monetary policies, should be on top of their game. They must also at all times endeavor to balance the need for this bank stability that we are talking about with the need to support economic growth.
Thank you so much.
The banks are not really supporting economic growth as it were.
Okay.
So much to say.
Okay.
They need to also manage inflation.
Okay. Deflation.
Thank you.
Okay, thank you so much, Sir Godson Eke, for being on the program with me today. I really appreciate your time that you spent with us, and it was well utilized, I must tell you. I want to say that this is where we'll round off this discussion, but we'll still continue with this and others, and on other occasions where we'll also have you in here with me, so we'll talk them more. Thanks a lot.
Thank you
for being here.
Thank you.
God bless you so much, sir.
Thank you so much.
Right. Thanks a lot. Right, sir. Well, that was the finance consultant, Sir Godson Eke, with me on the program today. I believe you enjoyed what he said and getting to understand more about this capitalization in an inflationary situation like what we have in our country. Well, we'll still continue with that. But before we round off entirely, we'll just take our news beats briefly and we'll return to conclude for the day.
Ghana's government has issued a stern ultimatum to MultiChoice Ghana, directing the pay TV operator to slash its DSTV subscription prices by 30% before August 7, or risk having its broadcasting license suspended. According to a report by Daily Graphic, the directive stems from concerns that MultiChoice's pricing in Ghana is disproportionately high compared to other African markets, despite recent gains in the local currency. Minister of Communication, Digital Technology and Innovation, Samuel Nati George, said the company's 15% price hike in April was unjustified, particularly as the Ghanaian cedi has significantly strengthened this year. During negotiations, MultiChoice reportedly offered to keep current subscription rates steady and temporarily halt the repatriation of earnings to its headquarters. However, the minister rejected that option, insisting on a price adjustment to reflect both currency appreciation and fair regional pricing. The Nigerian unit of the MultiChoice Group is also facing a legal battle in the country over its latest price hike implemented in March this year. As the country's consumer watchdog, Federal Competition and Consumer Protection Commission (FCCPC) is challenging the action. Under the new price regime, the DSTV compact bouquet rose from 15,700 naira to 19,000 naira, reflecting a 25% increase, while the compact plus package would go up from 25,000 naira to 30,000 naira, marking a 20% hike. The DSTV premium plan, the highest tier package, also saw a 20% increment, increasing from 37,000 to 44,500 naira. Similarly, GoTV subscribers were affected by the price hike, with the Super Plus plan jumping from 15,700 naira to 16,800 naira, among other adjustments. In response to the announcement, FCCPC summoned MultiChoice Nigeria to provide explanations regarding the price review. MultiChoice went ahead with the price increase on March 1, 2025, in direct violation of the Commission's instructions. Following this, the FCCPC instituted legal proceedings against MultiChoice and its Chief Executive Officer, John Uwe, over alleged violations of regulatory directives and obstruction of an ongoing inquiry. The case is now at the Court of Appeal, Abuja. The federal government has released first details on the 712.26 billion naira upgrade of the Murtala Mohammed International Airport in Lagos, which will involve a complete rebuild of Terminal 1, expansion of the apron to accommodate wide-body aircraft, and construction of a new bridge for direct passenger access. The Minister of Aviation and Aerospace Development, Festus Keyamo, disclosed this on Sunday in a statement via his official X account. The announcement follows the Federal Executive Council (FEC) approval of 987 billion naira last week for nationwide airport infrastructure projects, with Lagos receiving the largest allocation. According to Kayamo, the 1979-built Terminal 1, which houses wings D and E, will be stripped to its structural frame and reconfigured into a modern terminal that meets global standards. Years of neglect and surging passenger numbers have left the building obsolete, forcing temporary repairs over time. He explained that the plan also covers the expansion of the newer Terminal 2, enlargement of the aircraft apron to park more wide-body jets, and construction of 2 dedicated ring roads for arrivals and departures. A new bridge will also link passengers directly to the upper floor of the departure lounge, easing traffic and improving access.
Very much for being part of what has happened, and that's why we round off what we've got for you today. I want to say special thanks to Ihanyo Goji, who had worked with, of course, Okechukwu Onubogu, and not forgetting to mention Chidera Ubu. Chidera, you've been wonderful. Thank you. Bukola Oyale, thank you. Timo Bonna also, we thank you. Bamileri Kayode, Felix Akinjabula, Victor Chiza, as well as Victor Adeye, my great editor. Let me not forget to say thanks to my assistant Esther Abraham for all the running around. This is Okechukwu Onubogu. And what do I say? May the best happen to us all the time.